watching The Money Show with me, Kavita Thapliyal, and now let's connect with our viewers. And to answer their questions today, I have with me Kaustubh Belapurkar from Morningstar, and we have Mr. S.B. Sivakumar on the phone line with us. Good evening. How are you doing, sir, today?
I am fine, madam.
Thank you so much for sending us your question. I believe you have Tata Digital India, you have Kenorebeco Small Cap, Tata Small Cap, Tata Balanced Advantage Fund, Franklin India Equity Income, and you've been investing since last 2 years, and you want to hold this portfolio and these funds for more 6 years, right?
Yes, madam.
Okay. Any specific corpus that you want to accumulate?
I just for my retirement purpose, I am having the PF amount and the gratuity amount. Other than that, I am not having any debt right now.
Okay.
So I just want to use this money for my retirement.
Okay.
I have not set any goal for me.
All right. Sir, can I know how old are you?
I am 54, madam.
Okay. Okay. And you do know that these are all equity funds. I mean, you have one Balanced Advantage Fund.
Yes.
Okay. So you are willing to take that risk?
Yes, madam. Definitely. Over the period of time, after 6 years, a year or something like that, I will move all my funds to Balanced Advantage Fund so that I will get regular income.
Okay. Okay. That's good. That's good. Kaustubh, over to you.
No. So I think, when I look at the portfolio, a couple of observations, and that's important to understand. One is when we look at the overall asset allocation, obviously it's like we already asked Mr. Sivakumar, it is skewed towards equity. There's a fixed income allocation that's coming in through the balance advantage. The other thing that stands out is there's a fair bit of small cap allocation that Mr. Sivakumar has in the portfolio by the virtue of holding 2 small cap funds. And the first thing I would recommend doing, given that obviously he's looking to use this to build a retirement corpus 6 years down the line, which is honestly not that long a period when we think about equity investing, and especially when it comes to small cap investing. And probably now is a good time to book some profits. Small caps, as we were talking earlier in the show, have run up quite significantly. It is almost about 38.5% of his portfolio or his allocation right now. I would recommend bringing that down to 10%. Because we've seen in the past, and it can very well play out again in the short term, where small caps see a significant correction or don't really go anywhere for a prolonged period of time. We saw that in 2018-19, and it can very well play out again given the sharp run up that's happened. So I think very clearly what Mr. Kumar needs to do, one is switch out of a small cap exposure, bring it down to 10%, and reallocate that to more flexi cap funds, which are more large cap oriented. Something like a Kotak flexi cap or PPFS flexi cap would be great holdings for his portfolio. That's one thing that he definitely needs to do. The second thing I would recommend, currently from his SIP book that he's investing, almost 27% of that book is going into one fund, which is Tata Digital, which is really an information, technology fund. And I would urge to, kind of again bring that down, ideally completely stop it, or if you want to play a little bit of technology, about 5%. Whatever he's already invested in the fund, stay invested, and I'll tell you why. But when we think about sector investing, it is very, very fraught with timing risks. So even when we think about technology as a sector, it's gone through, like any sector, it's gone through its highs and its lows. And in more recent times, it's obviously going through a challenging time after seeing the great run up in 2021. So whatever he's invested right now, maybe, just stay invested because, like I said, the sector slightly beaten down. When it comes back up, he can gradually exit. But I wouldn't recommend any fresh investing in a sector fund, especially not to the, tune of, 20, 25, 30% of his portfolio. If he does want to play a little bit of sector exposure, 5% of the portfolio is good. So I would say reallocate all of this back into flexi cap funds. The other thing that very importantly, and Kavita, thanks for bringing that up, is asset allocation, right? Because like I said, 6 years is not that far away. And if this is money that you want to use eventually to serve as regular income to retirement, not only is it important that you have a steady source of corpus available to you at retirement, but that corpus shouldn't get depleted when you're building up towards retirement, right? So as you start approaching the goal, we're 6 years out, maybe in another year or two, start reducing your equity exposure. It might lower your return a bit, but what it'll do is it'll take away market timing risk. Because market timing risk, and we tell that to everyone, if you're an investor in 2010, and you thought you had a 10-year horizon, let me invest everything into equity, and stayed invested in equity for the entire 10-year period. Come COVID, which is obviously a significant drop in the market, but we've seen multiple such corrections in the market. You want to protect your portfolio against that, because you don't want your 100 to become 80 in the span of a year if the market drops sharply, which could impact your retirement income. So I think that's one other thing, that gradually start reducing your equity exposure to fixed income over the next, in the starting of maybe next year, and take that down to maybe like a 50-50 allocation as you come closer to your goal. I think these are broadly the contours I would work with, in terms of just reallocating the portfolio.
I think, Kaustubh, you've answered all the aspect of his financial portfolio inquiries, and I hope you've got your question answered, Mr. Sivakumar. And with that, Kaustubh, that's all we have today on the show as far as timing is concerned. Thank you so much for being a part of the show and helping our viewers. And I'm going to sign off, but I will be leaving our viewers with our WhatsApp number and email ID, where we keep waiting for their queries. So just in case you have any question related to your mutual fund performance or your investment, 8657974571 is our WhatsApp number. Email ID is themoneyshow@etnow.tv. Thank you so much for watching. Goodbye.